Chapter 1. Reintroduction to Audit and Assurance. Introduction, examination context, topic list, assurance defined, audit defined, 3. Audit and other assurance compared. Summary and self-test. Technical reference, answer to interactive questions, answer to self-test. Introduction, learning outcomes. Revise the concept of assurance from assurance paper. Revise the concept of audit from assurance paper. Understand the specific benefits of an audit. Syllabus links. This chapter revises key concepts from your assurance paper. Examination context. This chapter is revision of what you have previously been examined on in your assurance paper. You will need an understanding of what assurance services are and in particular audit brought forward from your lower level paper to answer any questions at this level. Assurance defined. Section overview. An assurance engagement is one in which a practitioner expresses a conclusion designed to enhance the degree of confidence of the intended users, other than the responsible party, about the outcome of the evaluation or measurement of a subject matter against criteria. Key elements are three-party involvement, subject matter, suitable criteria, sufficient appropriate evidence, written report. Different levels of assurance may be given in assurance engagements: reasonable and limited. An audit is an example of an assurance engagement giving reasonable assurance. Definition. Assurance engagement. An assurance engagement is one in which a practitioner expresses a conclusion designed to enhance the degree of confidence of the intended users, other than the responsible party, about the outcome of the evaluation or measurement of a subject matter against criteria. Assurance engagement include primarily audits, but also other services such as reports on internal control and review of a business plan. In recent years, businesses worldwide have been publishing sustainability and corporate responsibility reports in an attempt to demonstrate accountability for the impact of their activities on society and the environment. Such reports may be the subject of assurance engagement that provide limited assurance to management on reported elements such as key performance indicators, adherence to voluntary codes, etc. 1.1. The elements. The assurance engagement needs a responsible party, a practitioner, a user of the report, a subject matter, criteria, sufficient appropriate evidence to support the conclusion, a written report containing a conclusion. The engagement will be governed by its term of engagement found in an engagement letter. The engagement will need to be planned, performed, concluded upon, reported on. (1.2) Levels of assurance. The International Federation of Accountants (IFSC) recognizes two types of assurance engagement. 1. Reasonable assurance engagements, which result in a positive expression of opinion and where the level of assurance given is deemed to be high. And 2. Limited assurance engagement, which results in negative assurance and where the level of assurance given is deemed to be moderate. Engagements could be either type. and this would need to be specified in terms of engagement. So, for a report on the effectiveness of management system of internal control, it might be agreed that the report should read, in our opinion, management has operated an effective system of internal control, a positive form of opinion deriving from a reasonable assurance engagement, or nothing has come to our attention that indicates material internal control weakness, a negative form of assurance deriving from a limited assurance engagement. No report on an assurance engagement can ever provide assurance, absolute assurance, because of the nature of the evidence available. Reasonable assurance type, reasonable assurance level high, opinion or conclusion positive, example audit of financial state information. Limited assurance type, assurance level moderate, opinion or conclusion negative, example review of financial information. 1.3 Benefits of assurance. A key feature of assurance services is that they are provided by independent professionals who therefore give an objective, unbiased opinion. They give the following benefits to users: enhances the credibility of the information being reported on, reduces the risk of management bias, error, or even fraud in the information being reported on, draws the attention of the user to any deficiencies in the information being reported on. Assurance services also give added credibility to the wider share market. They ensure that high quality, reliable information circulates in the market. They give investors added faith in the market. They improve the reputation of organizations trading in the market. Word example: assurance engagement. Predator Limited, a large listed company, is considering taking over Target Limited, a small family-owned company. Predator has asked Talbot and Co. Chartered Accountants to carry out due diligence in relation to this prospective purchase. They want them to review the financial statements to the last 3 years and ensure that they were prepared under IFRS in Bangladesh. They also want them to review the budgets for the coming 12 months and ensure that they are reasonably and internally consistent. You can see the elements of the assurance service as this: practitioner, Talbot and Co. Responsible party, Target Limited Management. Users, Predator Limited Management. Subject matter, financial statement or budgets. Criteria, IFRS or reasonable and internally consistent. Talbot and Co. will plan and carry out work to obtain sufficient appropriate evidence to support their assurance opinion, which will be given in a written report. Talbot and Co. will plan and carry out work to obtain sufficient appropriate evidence to support their assurance opinion, which will be given in a written report. The benefits of the service to Predator Limited are that they are given assurance that the financial statements are in line with IFRS and therefore are understandable and comparable with other companies they might be considering for takeover. They are given assurance that the budgets are reasonable and internally consistent and therefore can be trusted as an indicator of the company's future operating ability. They can therefore make an informed decision about whether to buy target and for how much. Interactive question 1. Benefits of assurance. During the night of 7th June 2003, strong gales caused the brick chimney of the factory to crash through the roof of Hancock Limited's assembly area. Production was severely disrupted for a period of 2 months. In addition to claiming from its insurer for the cost of repairing the premises and for the equipment and inventories destroyed in the accident, the company is also including a considerable claim under the loss of profits provision of its policy. The directors have prepared detailed calculations of the loss of profit and have requested the company's auditors to review this claim and provide an assurance report which they will submit with it to the insurers. What advantage would the directors expect to gain from having the report? See answer to interactive question 1. Advantages of report regarding loss of profits. Independent opinion from external source. Enhanced credibility of compilation of claim. Confirmation that data subjected to review and examination. Comfort to insurers that risk of inflated claim reduced. Could accelerate processing of claim. Audit defined. Section overview. An audit is a key example of an assurance service in Bangladesh where all registered joint stock companies are required to have audits by law. An audit is an exercise designed to enable an auditor to express an opinion whether the financial statements are prepared in all material respects in accordance with an applicable financial reporting framework. An auditor usually expresses a conclusion as to whether the financial statements give a true a fair view. The audit threshold is the legal qualification for a company to have an audit. The benefits of audit are much the same as the benefit of assurance services generally. Users of financial statements subject to an audit are given assurance that the financial statements meet legal requirements as well as accounting ones. Definition: Audit of financial statements. According to ISA 200, overall objectives of the independent auditor and the conduct of an audit in accordance with international standards on auditing, the overall objective of the auditor in conducting an audit of financial statements are to obtain reasonable assurance about whether the financial statements as a whole are free from material misstatement, whether due to fraud or error, thereby enabling the auditor to express an opinion on whether the financial statements are prepared in all material respects in accordance with an applicable financial reporting framework, and to report on an financial statements and communicate as required by the ISS in accordance with the auditor's findings. Word example: how audit is an assurance engagement. The three criteria of an assurance engagement can be seen in an audit as follows. 1. Three-party involvement. The shareholders or users, the board of directors, the responsible party. The audit firm, the practitioner. 2. Subject matter, the financial statements. 3. Relevant criteria, law and accounting standards. 4. Evidence, the auditor is required by international standards on auditing or ISS to obtain sufficient and appropriate evidence to support the audit opinion. 5. Written report in a suitable form. As required by ISS 700, the independent auditor's report on financial statements, the auditor's report is a written report issued in a prescribed form. 2.1. The benefits of being audited. The case for audit for those businesses where it is not required by statute usually revolves around the protection of those who, apart from management, nevertheless have a financial interest in the company. For example, banks and other providers of finance, minority shareholders. Many would argue that in many cases the audit is valued by management because they value having their business scrutinized by another set of professional eyes. It provides additional assurance to third parties such as taxation authorities concerning the reliability of the financial statements. A growing business will one day require an audit. Audit may have subsidiary benefits such as the auditors recommending improvements in company systems. 3. Audit and other assurance compared. The earlier sections of this chapter looked at the similarities between audit and other examples of assurance. All assurance assignments follow the same basic outline, with the key difference being the level of assurance given in the final opinion. This has practical implications at various stages of the assignment. The specific differences relating to agreement of terms and acceptance of appointment are covered in Chapter 6. The differences in the detailed content of reports are covered in Chapter 13. 3.1. Nature of work undertaken. In the assurance paper, you studied in detail the sources of audit evidence and the types of procedure that are generally performed on an audit. For other types of assurance assignment where low levels of assurance are being provided, the amount and type of evidence required will be less. The following table compares the main audit procedures as outlined in ISA 500 with those that would be carried out in an engagement to review financial statements following the guidance of International Standard on Review Engagement or ISRE 2400, and with those that would be carried out in examining prospective financial information under International Standard on Assurance Engagement or ISAE 3400. ISA 500. Inspection of documentation, inspection of assets, observation, external confirmation, recalculation, reperformance, analytical procedures, inquiry. ISRE 2400. Inquiry, e.g. into the accounting principles in place the accounting systems in use and concerning material assertions. Analytical procedures, e.g., comparison with prior periods, comparison with anticipated results, and analysis of expected patterns in elements of the financial statements. ISAE 3400. Assessment of assumptions, recomputation, written representations. For reviews of interim and historical financial information performed by the entity's own independent auditor, specific guidance is given in BSRE 2410. 3.2 Quality of evidence. It is clear that far less evidence is obtained during a review assignment, and the evidence is generally less reliable as some of the most reliable sources, such as third-party confirmations and evidence generated by the assurance provider, are not required. In some cases, the nature and quality of the evidence that can be obtained is further affected by the nature of the subject matter of the assignment. If the firm is appointed to carry out a review of forecast figures to be presented to potential lenders, then again analytical procedures and inquiry will be employed, but the reliability of the evidence will be even lower due to the uncertainties involved. The figures being reviewed relate to transactions and events, some or all of which have not yet occurred at the time the opinion is given. The information is based on subjective estimates. 3.3 Reporting. In both of these cases, the assurance provider can give only a low level of assurance, and in the case of prospective information such as the forecast figures may include additional warnings to readers to the assurance opinion about the nature of the information and the assurance that can be given. Chapter 13 looks at the content of such reports in more detail. Interactive question 2. Review and audit compared. Difficulty level exam standard. The directors of Conali Limited are concerned about the reliability and usefulness of the monthly financial management information that they receive. As a result, the company's auditors have been engaged to review the system and the information is generated and to report their conclusions. Contrast this assignment with the statutory audit of the company's financial statements with regard to the scope of the assignment and to the report issued. Answer to the interactive question 2. Scope. This assignment agree between parties, restricted to instructions. Statutory audit in accordance with Companies Act 1994, in accordance with audit regulations, in accordance with ISS. Report. This assignment addressed to board, format wholly discretionary, private report. Statutory audit addressed to members on true and fair view, format prescribed, report in public domain. Interactive question 3. Benefits of an audit. Difficulty level easy. Acrylics Limited was established in June 2000 to produce acrylic products which are used as display units in the retail industry. The shares are owned equally by 2 executive and 2 non-executive directors. The company's revenue increased steadily over the first 2 years of trading. The result for the first year of trading indicated an operating profit margin of 15%, and the management accounts for the second year of trading indicate that it has increased to 18%. The directors are currently negotiating a contract worth 6 lakh CU to supply a major retailer which has over 100 outlets throughout Bangladesh. The company will require an increased overdraft facility to fulfill the order. The finance director of Acrylics Limited has prepared a business plan for submission to the company's bankers in support of a request for a larger overdraft facility. The plan includes details of the company's products, management, markets, method of operation, and financial information. The financial information includes profit and cash flow forecasts for the 6 months ending 31st December 2002, together with details of the assumptions on which the forecasts are based and the accounting policies used in compiling the profit forecast. The company's bankers require this financial information to be reviewed and reported on by independent accountants. Although the company's revenue was below the threshold for a statutory audit for its first year of trading, the company was required by its bankers to have an audit of its financial statements for the year ended 30th June 2001. Your firm conducted this audit in accordance with auditing standards and issued an unqualified report. Requirements: A. Describe the benefits in addition to continuance of its overdraft facility to the company and its directors and shareholders from having an audit of its annual financial statements. B. Explain how and why the level of assurance provided by a report on profit and cash flow forecast differs from the level of assurance provided by an audit report on annual financial statements. Answer to the interactive question 3. A. Benefits additional to continuance of overdraft facility of having an audit. 1. Shareholders who are not involved in the day-to-day management of the company or non-executives will have assurance that their interests are protected, i.e. company assets are not abused. 2. Financial information is likely to be more reliable, resulting in more informed decisions. 3. An audit improves a company's governance. Management benefits from assurance that they are complying with their statutory responsibilities, including the prevention and detection of fraud, as the audit may act as a deterrent. Byproducts of the audit, such as the identification of weaknesses and recommendations for improvement, reducing risk and improving performance. 4. An audit imposes financial discipline which is useful for growing companies. B. It may be easier to obtain credit as suppliers and credit rating agencies regard the additional assurance provided by an audit important. B. How and why the level of assurance provided by a report on profit and cash flow forecasts differs from the level of assurance provided by an audit report on annual financial statements. 1. An audit conducted in accordance with auditing standards provides a high level of assurance, which is reasonable but not absolute. 2. The delay between the reporting date and the date of audit report means that even items such as provisions or estimates can often be substantiated. 3. A review of forecasts is only likely to provide a moderate level of assurance. 4. This is because financial statements are based on historical information and forecasts are based on assumptions which are subject to uncertainty. Interactive question 4. Examination of cash flow forecasts. Difficulty level, exam standard. Your firm has been engaged to examine the cash flow forecasts prepared by the management of a company whose principal activity is the installation of electrical systems for the customers in the retail, construction and industrial sectors. All contracts are fixed price. Customers pay 95% of the contract on completion of the work and withhold 5% of the contract price for up to 6 months from the date of completion in case remedial work is required. The materials and components used are bought from suppliers who require payments within 30 days of the invoice date. As a result of a significant fall in demand for its services, the company has closed 2 of its regional depots and put both premises up for sale. It has also made 25% of its employees redundant. Requirements. A. Identify the specific matters you would consider when examining the assumptions underlying the receipts and payments included in the company's cash flow forecasts. B. Explain the level of assurance that will be provided in your assurance report as a result of your examination. Answer to the interactive question 4. A. The following matters should be considered when examining the reasonableness of the assumptions underlying the receipts and payments. Receipts. Trading receipts reflect the reduction in demand in the construction sector. Potential loss of business following the closure of the 2 depots. 95% of the contract price is received on completion and 5% received 6 months later. The fact that amounts due may not ultimately be paid. Receipts from sale of premises. Realistic proceeds from the sale of the 2 depots that reflect local property values. Payments. Payments for components and raw materials reflect the 30-day credit terms. Payee, NIC and other taxes are paid on the due dates. Redundancy payments are in accordance with legal or contractual obligations. Ongoing wages reflect reduced workforce following the redundancies. Any extra costs, e.g. transportation costs involved in servicing contracts from distant depots and a fall in overheads after the sale of the 2 depots are reflected. Professional costs, e.g. legal and selling agent involved with the sale of depots are included. B. An examination of cash flow forecasts is likely to provide only a moderate level of assurance. This is because forecasts are based on assumptions which are subject to uncertainty. Self-test. Answer the following questions. 1. Define an assurance engagement. Answer to self-test 1. An assurance engagement is one in which a practitioner expresses a conclusion designed to enhance the degree of confidence of the intended users other than the responsible party about the outcome of the evaluation or measurement of a subject matter against criteria. Self-test 2. Any assurance engagement requires which of the following elements? A user, B, a responsible party, C, a subject matter, D, criteria. Answer. All of the elements listed are required, as well as a practitioner and sufficient and appropriate evidence leading to a written expression of opinion. 3. In a reasonable assurance engagement, a negative conclusion is drawn. True, false. False. A positive opinion is given in a reasonable assurance engagement. Four. An audit is a limited assurance engagement. True, false. False. It is a reasonable assurance engagement. 5. Which of the following is not a potential benefit of having an audit? A. Management may value having their business scrutinized by a set of professional eyes. B. Assurance may be given to parties other than management who have a financial interest in the company. C. An audit is likely to be required in the near future by a growing company. D. Fraud will be uncovered by the auditors. D. Answer D. Although an audit may act as a deterrent to fraud, it does not certify that one has not occurred. We shall look at the responsibilities of auditors in relation to fraud in the next chapter. Exam style question 6. Treetops Limited. Your firm acts as an external auditor of Treetops Limited, a company whose principal business activity is the manufacture and export of hammocks. Due to recent changes in the ownership form, Treetops Limited is no longer required by law to have an audit of its financial statements for the year ended 28 February 2005. The directors of Treetops Limited have asked you to set out the main advantage of the company continuing to have a statutory audit and also to provide them with examples of such of the other types of assurance work which your firm may be able to carry out for them. The company's managing director has also requested a meeting with you. He has recently discovered that his purchase ledger clerk has diverted CU 10,000 of company funds into his own bank account. The managing director wants to know why this was not discovered during the course of your audit for the year ended 29 February 2004. The company's retained profit for the year was CU 3,50,000. Requirements. A. briefly describe the advantages to the directors and shareholders of Treetops Limited of continuing to have an audit when an audit is no longer required under the Companies Act 1994. B. Provide examples of 4 other types of assurance engagement where the scope of the work is agreed between the assurance firm and the company. For each engagement identified, briefly set out the nature of the assurance given in the accompanying report and where applicable, identify potential users of the report other than the company's management. Now go back to the learning outcomes in the introduction. If you are satisfied you have achieved these outcomes, please tick them off. Answer. Treetops Limited. A. Benefits of audit. 1. The credibility of financial information would be enhanced. 2. Enhances the value of accounts for business valuation purposes in the event of a sale. 3. Authorities such as tax commissioner can have more faith in the figures. 4. Avoids the future cost of extra work by the auditor when audit exemption limits are exceeded. 5. Avoids a potential future qualification over the opening inventory figure. 6. Makes it easier to raise finance. 7. May act as a deterrent to fraud or management abusing assets or reduce risk of management bias. 8. More reliable information results in more informed decisions. 9. Provides management or shareholders with assurance that the financial statements are true and fair or prepared in accordance with accounting standards. 10. Byproducts of the audit such as identification of weaknesses and recommendations should reduce risk and improve performance or management later. 11. Impose discipline on management and accounts staff if they know that the figures will be subject to third-party scrutiny and therefore encourages best practice. 12. Gives management comfort that they are complying with their professional responsibilities. The accounts comply with the Companies Act. B. 4 other types of assurance engagement. Fraud investigation. The conclusion or assurance will be based on the extent of the work carried out. The report will 1. Identify likely causes of fraud. 2. Attempt to quantify the level of fraud. Potential users would be 1. Legal experts in a court case. 2. The police. 3. Internal or external auditors. Working capital reports or reports on inventory and trade receivables recoverability. The report will state whether 1. Trade receivables are likely to be received. 2. Inventory can be sold profitably in the near future. Potential users would be 1. Potential buyers. 2. Investors. 3. Banks. 4. Internal or external auditors. Internal control reports. Such a report would 1. Comment on the effectiveness of internal controls and highlight weaknesses. 2. Make suggestions for the improvement of controls. Potential users would be regulatory bodies, shareholders, internal or external auditors. Report on business plans or cash flow forecasts. The assurance given would be negative or limited or moderate, i.e. nothing has come to our attention. The report would state whether 1. The business plan or forecasts have been prepared in line with stated assumptions. 2. Nothing has come to light to indicate that the assumptions are not reasonable basis for the plan. 3. The accounting policies used are consistent with the annual accounts. 4. The plan is consistent with the past performance of the company. Potential users would be bankers, other lenders, external auditors. Additional credit was given for mentioning the following alternative engagements. Half mark for each up to a maximum of 2 in total for all types of engagement identified. Value of money studies, environmental audit, circulation reports, cost or benefit reports, due diligence, branch audit, review of specific business activities, internal audit